Hello everybody. Today's video is going to be covering CISDs and OBs. So many of you guys have already seen the original two videos of CISD and OBs. This is basically a sum up of those two videos into one with a PDF that would assist you to identify, CISDs, OBs, and really understand them. So some foundational information, concepts to understand that I'll be covering in this video and that some of you guys may have already understood from the previous video, right? So how to understand CISDs, basically meaning how to go ahead and engage them, how to really incorporate them into your trading. 2, probable CISDs and OBs. With number 2, I'm going to be discussing probability regarding CISD and OBs more than anything. 3, reverse engineering, which is going to be something that once you guys gain more experience, we'll start realizing as time goes on. The reason why I put reverse engineering in this title or in this slide specifically, I'm gonna go into detail with it actually, is because a lot of the times with your trading, you'll have a draw on liquidity, and sometimes you'll miss that draw on liquidity, or sometimes price will accumulate before that draw on liquidity, and you have to choose, okay, that draw on liquidity is where I want to see price go, but what is price more likely to do in between now and that draw on liquidity before it reaches, right? Is it most likely to go higher to a premium and then go down to that draw on liquidity? Is it most likely to go lower and then distribute stronger off of it? That's what I mean by reverse engineering. And 4 is entries, right? So let's continue on. Understand before utilizing. So CISDs, how you're going to use them. CISDs are probably the most basic entry model that most ICT traders use as an entry method, right? Change state of delivery. It establishes a distribution, imbalances, and a protected stop, and it gives you a solid risk to reward to support your trade. So many of you guys already know, if you trade, let's say, if you're a person who likes turtle soups, you are entering, I wouldn't say turtle soups is probably one of the most complicated entry parameters you could possibly have if you don't know how to do it. CISD is very basic. It's very beginner friendly or experience friendly if you know how to use it. I mean, look how Trader Kane does this stuff. Look how Jade Cap trades. Jade Cap trades a 2022 model, which incorporates a market structure shift. So look how simple CISDs can be in that sequence as well. Of course, a little bit different, but fundamentally, initial distribution, fair value gaps, they all get created in both market structure shifts and CISDs, right? So with CISDs, you're not treating a very complicated concept, right? You're just utilizing QT to refine it and to basically improve your understanding of what a CISD is. That's really what QT is going to be meant for, right? Sequential SMT and CISDs, right? Like almost every QT concept, sequential SMT is a foundation of a CISD as well. Now, let me specify something here. Sequential SMT is a foundation of every CISD. What do I mean by that? In this video, I'm going to be covering over 2-bar CISD OBs, which is basically a back-to-back sequential SMT, or 2 candles that create sequential SMTs, candles that are back-to-back to each other. And then the second candle's wick takes out the low, while the first candle's, while on another asset, it doesn't take out the low, right? So that's what I'm going to be going over regarding the sequential SMT aspect. You can also use it normally regarding normal sequential SMT, and then later on, you look for a CISD, right? Mind you, sequential SMT is a foundation of CISD as well, right? Same with QT. Not only for entries, but also for analysis. I want to specify something here. When it comes to looking at CISD OBs, I use them a lot for my analysis. I use them a little bit differently, but I use them a lot for my analysis. I really don't like entering off of higher time frame CISD OBs alone. They need to be backed by something, preferably discounted PD arrays or premium arrays, depending on exactly where price is headed to, and other forms of cracking correlation, maybe even a lower time frame sequential SMT to go ahead and help. Understanding your initial move up or down will allow you to justify your next trade. Let me explain why I put this in this paragraph, because a lot of you guys like to go ahead and try to top tick or bottom tick. That's great. That's cool. I'm glad that you like to do that. And if you want to keep on doing that, that's fine. But if you're having trouble finding just consistency on the basics, right? Let your initial move up or down occur, and that will tell you where price is heading, right? You're not missing anything. You're just waiting for confirmation, right? When you get more experience, you can start going ahead and actually entering off the point of interest or liquidity that will initiate the CISD, and you will train yourself to do so. But as a beginner, some of you guys are more experienced. You guys seen me do it, entering off the POI, anticipating the CISD to occur, right? So that's how you guys can go ahead and utilize that. Now, understanding CISDs. I'm going to reference this photo a lot in this video, so pay attention. The most probable CISDs will occur after sequential SMT has been instilled in the marketplace. Your objective is to either enter off the creation of the CISD or wait till price mitigates the higher time frame order block, whichever produces a higher risk to reward. So in this case, what do I mean by entering off of the CISD that is instilled? So this is a 15-minute time frame, right, in which you guys are also going to be utilizing the 4-hour, which I'm going to explain in a different video. You guys will see it later in the fractal PSP video. You have a DFR, right? DFR gets hit, or DFR projection. We had this initial move down. The reason why I put this slide specifically is because I had one student enter off the CISD OB down here, which, to be quite frank, doesn't make any sense to me because we're not really mitigating anything in this range. But we did have sequential SMT there at the lows, which I can understand why. Now, I mentioned DFR because I'm also going to mention in the video as well. When you're looking at DFR and you're looking at sequential SMT in your CISD, right? Look what would have happened if you would have waited for your initial expansion, right? Your initial expansion, you create the CISD, which is actually here, not up here, here. This is a higher time frame CISD, right? And what occurs? Your OB, right? This opening price of this 4-hour candle would now be considered your order block, and I'm explaining that in the next slide, right? So your entry can either be off of the lower time frame CISD, which is right here, or the retest of the higher time frame order block. Now, of course, I am not entering simply off of the retest of the higher time frame order block. I am looking for lower time frame crack and correlations and refining my entry within that order block. So in this case, you could have easily taken potentially a microcycle, or we had a microcycle at these lows, microcycle inside a 15-minute discount array, alongside with it being inside the 4-hour order block. So there's a bunch of confluences you can use to go ahead and support a trade if you just refine it. So again, restating this, you either enter off of the actual CISD created after your initial move up, after your sequential SMT, or my recommendation, wait for that higher time frame order block to be not created, to get closed above, wait for a retest, refine that entry down some more, and you'll be able to have a higher risk to reward and usually a higher win rate, right? So take that into consideration. Reference. So as I mentioned, I'm going to mention the 4-hour. Here's a prime example. So what you guys saw in this candle or in this screen was the 15-minute, right? Daily cycle sequential SMT. Here's a 4-hour time frame. Right here is going to become your order block, your last down close candle before your initiation upwards. Then you have a retest of that order block. And then what do you have? You have two things. You have a retest of the order block alongside with a retest of the discounted 15-minute array or discount array at the lows. And it's all supported by the daily cycle sequential SMT, right? So using that as a reference point in your trading. Lower time frame CISDs following the time frame alignment will produce a significant expansion. As you guys already know, CISDs, if you're catching reversals, that first CISD you're going to see on the 15-minute or the 5-minute or 15-minute preferred, or most of the time, is usually going to be in a very aggressive expansion, right? And sometimes, very, very likely that occurs after that CISD is created, the next candle just goes straight up, right? And it comes back down later in the day, right? Makes you get FOMO saying, oh, I missed a trade. You FOMO into longs, and then it comes back down, hits the OB, you get stopped out, and then it goes right back up to your take profit, right? Now, but in most cases, not all, the risk to reward will be sacrificed drastically. As I mentioned before, since you have that massive expansion on the lower time frame, usually 15-minute or above, you're probably going to miss your initial, in quotation, initial entry. And some of you guys might get FOMO, but if you know that price is going to reference that order block again, there's no need to worry. Simply just wait, right? And I'm going to talk about that after I finish this slide, in which a solution can be easily derived from this problem. Meaning, okay, fine, if you missed the first trade, what can you do? Or if in most cases the risk to reward isn't good because you wanted to FOMO into a 15-minute CISD long right after sequential SMT, right? You're kind of screwed there, but there's a solution to this, right? Wait for your higher time frame order block to be mitigated and then look to refine it on the lower time frame to validate a second expansion, leg up or down depending on if it's a bullish or bearish order block / CISD. Now, why a second leg up or second expansion? This is simply just using MMXM, right? You have your lower time frame accumulation, you have your reversal, your POI getting hit. First distribution is your 15-minute CISD or whatever the CISD may be on whatever time frame depending on the sequential you're looking at. And then your second accumulation will usually kick in towards the end of that CISD. And then, your second manipulation will kick in towards the end of that CISD and then come back down, hit the order block, and redistribute back up higher for the second stage delivery, right? Now, I want to mention something because I already brought it up. The reason why me and Fear are so aggressive when it comes to just being patient and just understanding, right? Because a lot of you guys have problems with controlling yourselves, right? You guys get eager too much, right? And that eagerness and that impatience tends to come from lack of experience and lack of understanding. What do I mean by lack of understanding and lack of experience, right? If you don't know this, you're not going to know that OP is going to get hit. You're also, if you don't train your eye to see it, once that 15-minute CISD occurs, you don't know what's going to happen next. You already missed your entry. That picture perfect scenario that you put in your head has now been invalidated, right? And your entry is now ruined. You're like, shit, I missed my trade. Hell, what the fuck do I do? That's going to ruin you. That's going to ruin your mentality. That's going to ruin your trading because you just don't know. Don't have a cookie or don't have a picture perfect scenario in your head. Be open to different scenarios, right? So make sure that every moving part incorporates the previous one, or make sure that every part of your outlook incorporates the previous one. Meaning, if you want to see this needs to happen first, and this needs to happen after that, right? So it's all intertwined, and if it doesn't follow, it doesn't follow. That's fine, right? But stick to your rules, stick to your analysis, and don't get easily distracted by price expanding or distributing off of a POI, right? A lot of the times that's just manipulation to scare you into a trade. Don't fall for it. So this is where the meat and potatoes are for this video. I'm going to reference a few things that are in this video, in this slide. So the reason why I'm going to do it is because I feel as if I've already seen most of you guys have problems with it, and I want to go ahead and clarify some of the things in this video that some of you guys might have problems with. So let's get active with it, right? So the simplest way to understand price, delivery, and probability is by utilizing current market structure alongside with premium and discount. The reason why I mention this, okay, is because a lot of the times, I know some of you guys are standard deviation traders. I'm going to let you know right now, the only standard deviation that makes sense and the only one that's actually going to work is a fixed time interval deviation. A fixed price interval deviation does not make sense. Let me explain to you why, right? I made this analogy multiple times, but I'm gonna do it again. If I put 100 of you guys into a room and I give you a week worth of price action, and I tell you, graph me out a valid manipulation leg, all of you are graphing out different, maybe 20 of you might have the same one, but all of you are going to have different manipulation legs. And if I put you guys all into a room and tell you trade for a week, and I review all of your annotations on your chart, all of you are having different deviations. Also too, with deviations, you need to understand every single time you go above -2, or honestly above -1, the deviation drops off, right? So anything above -1, the probability of the deviation working drops off. It just chips off on a percentage, and the probability just goes lower and lower and lower and lower and lower. It's like if you were to put a -20 deviation off of a manipulation leg and say, oh, that's my target, the probability of that going to hold is minimal, right? For a multitude of reasons. So when it comes to CISD OBs, you're utilizing what is already instilled in the marketplace, structure that is already priced in, meaning old highs, old lows, old PD arrays, old imbalances, old analogs, whatever you're utilizing has already been instilled in the marketplace. It's not new price action, right? You're not trading into a -1 deviate or -2 deviation of some fuck ass manipulation leg. That makes no sense, right? You're trading into a PD array that's already instilled in the marketplace. There's liquidity already in it, and it's going to react off of it, right? And that goes into my second point. Deviations are probable if it is measured by either a fixed price point, meaning, what do I mean by that? A valid manipulation, not some bullshit one that you guys like to draw out now, or preferably a fixed time interval. Time intervals are the only thing that market makers cannot manipulate. They can manipulate the whole X or Y axis, meaning all of price, but they cannot manipulate time. They cannot buy back time or add in more time. What's on that X axis is on, and from market open to market close, it will happen every single day, all day, right? It's not going to close a minute early, close a minute later. No, it's structured. It's the only thing in the whole market that cannot be manipulated, okay? Once price has achieved its short-term draw on liquidity, there will most likely be an expansion candle that has a PSP attached to it. Now, again, this is the meat and potatoes of CISD and OBs. Now, when it comes to this, I'm going to say the second point as well. So I'm going to refer to this one and repeat this one so you guys can have an understanding of what I'm saying. Once price has achieved its short-term draw on liquidity, right, let's say a discount rate, there will most likely be an expansion candle that has a PSP attached to it, right? Now, there is also another one, right? Either the opposing candle before the expansion candle or the expansion candle itself. This will be your reference for entry. Now, what do I mean by that? Two things. The PSP can either be the down close candle, your order block, right? Before your expansion up higher, or it can be the actual expansion candle itself. Now, why is this important? You're going to reference your order block, right? And sometimes, let's say hypothetically, you have your down close candle, right? And then the expansion candle takes out the previous down close candle's low, right? This happens a lot on the higher time frame, by the way. Let's say you have a down close candle on the hourly, right? And then the next candle, right? Let's say the 9 a.m. candle takes out the 8 a.m. candle's low. And the 8 a.m. candle is a PRC. When you take out that low, if there's 90-minute attached to it, you're expecting a substantial push upwards, meaning you're going to look for a lower time frame CISD on the 5-minute. That 8 a.m. candle, once the 9 a.m. or if the 9 a.m. candle closes above the 8 a.m. candle's opening price, that 8 a.m. candle now becomes an order block. Do you guys understand what I'm saying? That's how you're going to utilize this. This works on a fractal scale, but anything under the 5-minute tends to have a lower win rate. The reason why I mention this and the reason why I say this is because if you're utilizing anything on the 1-minute, if you're not experienced, you're going to get stopped out. Guaranteed it's going to happen. So don't use it on the 1-minute, because a lot of times the 1-minute has fake expansions that are just, price coming back up into a short-term range and then distributing back down lower. So don't use the 1-minute. Stay anything above the 5-minute and you'll be fine. And here are some examples of what you can look for in entries, right? So first off, 5-minute OBCISD, expansion candle being the PSP or PRC, and then a 1-minute PSP within the 5-minute after it closes, right? With your SL at the low of the 5-minute PSP/PRC, right? And then here's a perfect example of that happened this past week, right? So under true week, under true day, gonna go over that in another video. Then you have 90-minute cycle sequential SMT at the lows. We hit a discounted 15-minute array. And what do you have on the 5-minute? Since there's 90-minute, you look for a 5-minute OBCISD. you can also look for a hourly OBCISD at the same time, by the way, guys. Let me just make sense, or let me make that clear. You can look for a 5-minute one to refine it and look for a lower entry in the lower part of that, not of the wick, but of, I mean the wick of the opening or the higher time frame candle. And then you're entering long. So in this case, you have a down close candle. We don't take the low on NQ, but we take the low on ES and YM, I think, in this case. Or it might have just been YM. And then this up close candle becomes a PRC. We close above the opening, or the opening price of this down close candle, making this down close candle the OB. And then you look for a lower time frame, preferably a 1-minute entry, PSP entry within that range. So now look at this picture right here. Notice how once we close above the opening price, we struggle to go under it and distribute lower, and price accumulates, and then expands up higher toward draw and liquidity. So now I'm going to show you guys some examples of this, right? So here you have a non-sequential SMT, just a normal SMT at the lows, right? A normal SMT at the lows. And then what do you see price do? Right? Again, this is internal range liquidity being swept. So it's important for a certain reason. I'm going to explain why. So anticipating Day's model of where you have a higher time frame non-sequential SMT, meaning there's no sequential SMT in this range, and then you anticipate a lower time frame sequential SMT to occur, and then deliver up to its objective, which is buy side, which will happen here, right? Your non-sequential SMT, and then what do you have? Down close candle at 11 a.m., right? Which is also a PSP, right? And then after that, you have a up close candle. This up close candle, there is no swing. There is no swing here, right? Zero. Okay, make it clear. There is zero swing in this range, but I'm going to tell you guys why you're going to be utilizing it. Even though there's no swing in this range, this candle is an hourly PSP. This will then become your OBCISD. Now, why would this candle become your OBCISD? Take a look at ES. Look what ES did in this case, right? And I'm going to reference it because you're using all assets when you're doing this, right? What do you have? You do have a swing, not with candle 2 and candle 3. You have a swing with candle 1 and candle 2. ES and NQ both take out the low, form a PSP. YM fails to take out the 10 a.m. low at 11 a.m., but NQ does. So you have this initial expansion, internal, external, right? This is a 3-candle sequence. If you know what it is, you'll see in another video. You have a 3-candle sequence in which internal range, external gets mitigated, and then you have candle 3 close above the opening price of candle 2. It's very important that you have price close above the OB's opening price to validate it. And then from there, you have a distribution in which you then swing grade. If you're anticipating a lower time frame sequential SMT to occur in this range, you're not targeting buy side, right? Especially when you have ES distributing more than NQ and YM as well. You have two options. Either you refine your entry here and you just target the buy side on ES instead of taking the trade on NQ, or you use a proper range, right? And you target EQ of this range or the 75 percentile, whichever produces a better risk to reward, or OTE, depending on the range, right? So in this case, your draw would be when ES mitigates this high, right? This is again utilizing the triad, right? A lot of the times what I do is I have a target set on ES, and when ES hits that target, I usually sell my contract on NQ because it usually means that price is going to reverse, right? If I see NQ's already hit all my targets and the asset that's actually holding up price is ES, I would usually TP once ES takes out that high. So this is the same sequence, right? You see price accumulate, tap into the OB, refine the entry here with whatever you like, the 5-minute preferably. We're actually going to do that right now. We're going to do that together to show you guys, right? So this is your OB, right? This 11 a.m. candle is your OB. You go on your 5-minute time frame. Let this load. And then you refine your entry, right? And refining entry can be what in this case? Well, it can be anything. So 11 a.m., so 11:30, all the way up to 12 is going to validate anything in this range. So the 12 a.m. candle is a candle that actually closes above. So 12 to 1, right? So anything in this range can be validated, right? So you have here a SMTF, IFEG, the price referenced, alongside with an internal low, right? So you have internal liquidity, IFEG. Again, this is one entry. It doesn't have to be this. Then you have a price come up, accumulate some more, tap the IFEG again, and redistribute up higher, right? Entry can either be, if you want, here, stops under these lows down here, targeting whenever NQ hits buy side, or whenever NQ hits the high, or ES hits the high. And then here you have it, right? So again, you can refine this some more if you want. You don't have to follow this exactly, right? But here you have ES, NQ accumulate, blah, blah, blah. ES still has to hit its target. ES has not hit its target yet, right? What do we do in this range? Come up, come back down, come up and distribute, and then UTP once ES hits buy side, which is this candle right here at 12.25, right? Giving you a 2.9, almost a 3 risk reward ratio, right? This is one way of trading the OBCISD, referring to your other assets to go ahead and gauge premium and discount and targets, right? You don't have to always draw your target right on ES, right? So segueing off of that, I have another example I want to show you guys. This is how it looks like on the lower time frame, right? A cookie cutter way of looking at it on the lower time frame. So candle 1, candle 2, candle 1, this is candle 1's low. Candle 2 takes out candle 1's low, creates a sequential SMT preferably, right? If there's no sequential SMT already created, this would create the sequential SMT. And then as you see this, opening price, and then you have closing price of candle 1, opening price of candle 2. Candle 2 takes out candle 1's low, and then you're looking for a buy program, in which in this case, you can probably find an OB somewhere in this range for them price to reference it and then come back up higher off of it, right? So again, once that SMR is created, you're looking for a buy program back up to either the previous candle's high, right? So more of like a CRT essentially, to the previous candle high, or you're looking to go ahead and wait for this hourly candle to go ahead and close. I'm using the hourly as an example here. You're waiting for the hourly candle to go ahead and close, and then price to redistribute up higher in the next hour. So when you're catching like bottoms and tops of ranges, right, and you're expecting to say like an external draw on liquidity, right, you need to, if I were you, I would really look at the 1 hour time frame, and I'm gonna explain to you why I look at the 1 hour time frame. Candle 1's low gets mitigated in candle 2, obviously, right? Now, candle 2, you're looking for an SMR because you have your sequential SMT. You're expecting at least at bare minimum the candle 1's high to get hit. So that would be your break even, right? But your draw is still that external high. What are you going to do? Once this candle closes and forms an order block, it doesn't mean drag your stop loss to EQ the fucking distribution candle. Put your stops to break even because that shouldn't get hit anymore, right? Now you have a candle closure above this down close candle, creating the order block, right? Price will probably reference EQ of that candle and then send it back up higher, right? And it might not reference it on the asset you're trading. It might reference it on another asset. That's fine. But this is why it's important to know when to trail your stops. You most likely trail your stops to this internal low once we take out that high created in candle 2. Does that make sense? Once we go ahead and we come back down to EQ on at least one asset class, and we take out the initial high created in candle 2, right? Or in candle 3's opening price, then you would go ahead and drag your stops and trail your stops because it shouldn't be mitigated, right? Hopefully that makes sense, right? So this is how it looks like, power of 3 in conjunction with quarterly theory and OBCISD. This is how you're really looking at it, right? When you're looking at PSPs, same shit. You're going to be utilizing them a lot. So incorporate them into your trading. And trust me, you'll go ahead and see a difference and improvement, right? Use them for analysis, use them for entries, use them for reference points. And yeah, hope you guys enjoy. Peace out.